Welcome back to Explain the Charts. Today is January 29th, 2025, and we're tackling the USDCAD pair. Recent news and analysis point towards considerable volatility and uncertainty in the USDCAD market. President Trump's tariff threats against Canada have weighed heavily on the Canadian dollar, creating a bearish sentiment. However, the Bank of Canada recently cut interest rates, causing a temporary, but fleeting, surge in the US dollar to Canadian dollar. The pair is currently hovering around 1.44, fluctuating around broken support levels, indicating a bearish trend. The Federal Reserve's impending decision adds to the uncertainty and is another factor to watch closely. Let's switch to the 1-hour chart to examine the short-term dynamics. Here, we can focus on the recent price action, especially the period around the interest rate cut. Observe the candlestick patterns. Do you see any signs of a reversal or continuation pattern forming? The sharp decline and break of the 1.4301 support level confirmed the prevailing short-term bearish trend. Look closely at the volume levels during the price drop. What insights do they provide into the strength of the downward momentum? Notice the relative lack of strong support levels above the current price. This lack of support increases the probability of further downward pressure. Now, let's narrow our focus on the 15-minute chart. We can drill down into specific candle ranges here. The high frequency of trades reveals the short-term market sentiment and may show some short-term support and resistance levels. Observe the smaller candlestick patterns. Are we seeing any indications of a potential short-term reversal? The price action on this chart shows a high degree of volatility with rapid and unpredictable price swings. Consider how this short-term volatility could impact your trading strategies. Returning to the daily chart for a broader perspective. Over the past few weeks, we see a clear downward trend, interrupted by temporary rallies around the 1.35 and 1.36 levels. These previous support levels have now become strong resistance levels to watch for on potential price reversals. The high volume during these price swings and around the 1.4301 support suggests significant market interest and a possible increase in volatility. Let's summarize the key price levels and discuss our outlook. Short term, the 1.43 level appears to be a crucial support level. A break below could trigger further downside movement. Alternatively, strong resistance remains around the 1.36 level, which could cause a temporary bounce. In the long term, the pair's trajectory depends heavily on the geopolitical landscape. If the US-Canada trade tensions escalate, the Canadian dollar may further weaken. It's important to keep a close eye on the news concerning the US-Canada trade relations, as this may significantly impact market sentiment and influence price movements, causing fluctuations and rapid changes in the US dollar to Canadian dollar rate. The Federal Reserve's decision will also be a major factor. Traders should employ risk management strategies and be vigilant to the fast-paced changes that may result from unpredictable shifts in market trends. Remember, this analysis isn't financial advice. Always conduct your own research before trading. Stay tuned to Explain the Charts for more insightful market analyses.